A slew of corporate results helps lift European shares. Welcome to Market Insight. I'm Ramzan Karamali. It was mainly positive news on the earnings front this morning. Ahold Delhaize, Anheuser-Busch, JD Wetherspoon among the winners. But there were poor results from some too, with British fashion online retailer Boohoo experiencing widening losses. Well, to help look at those results in more detail, I'm joined by Zoe Gillespie, Investment Manager at RBC Brewin Dolphin. Zoe, thanks so much for joining us. Well, let's start with one that looks like a winner on the face of it, JD Wetherspoon. Another upbeat forecast for the year for the pub chain. Why? Why are they so positive?
Tim Martin hailed it the return of the Great British pub. And I think it was interesting to note that sales were up, as you say, over 5%. And I think he highlighted really strong sales in traditional ales, which seem to be more popular again, and vodka drinks amongst young people. And interestingly, he also said that Guinness, which had always been seen as a more traditional middle-aged drink, has now started to become more popular amongst the younger generation. So I think certainly we've seen that the pandemic blues are pretty much behind JD Wetherspoon. They've also said that they're going to close a number of their pubs or shut some leases too. So I think certainly some cost savings have helped. But all in all, as you say, a strong set of results, and the share price was up about 3% this morning on the back of it.
Let's stick with alcohol now. And Anheuser-Busch, they had results too. Does it look like the boycott of Bud Light is behind them now? Do you think the world's largest brewer can move forward from that sort of crisis?
Again, it was a bit of a mixed bag here because it was good sales growth overall, but Bud Light sales were disappointing, down over 9%. But we have seen some good numbers coming through from Corona and from Stella Artois to make it up. But certainly the put-off US sales was made up by the fact that we saw good numbers coming through from Brazil and South Africa. And earnings come in, certainly higher than expected. So overall, again, good set of numbers, and the share price was up again this morning on the back of it.
We also had some pretty interesting results from Ahold Delhaize as well. The supermarket chain doing better in Europe, but not so great in the US. What does this tell us about consumer behaviour in the two regions?
Well, I think there was a few things attributed to this. I think certainly they said that certainly US sales were down. And I think we've seen potentially a move to more low-cost brands. And certainly they were seeing a change in benefits had impacted lower income families. So it was a tale of two halves. But overall, certainly the margins have remained pretty intact. And I think they've said that they expect margins to be about 4% or higher. So even though operating income is down, it was still actually a decent set of numbers. But you're right, I think we've maybe seen a bit of a slowdown in the US consumer in that part of the market.
Now, on the negative side of things, we have BMW. What's going wrong with it, and other big European car makers for that matter?
BMW was quite interesting because what we saw was that their actual sales numbers remained fairly steady, but their profit was down by, certainly nearly 20%. And I think that was attributed to the fact that electric vehicle sales, which had been strong, are less profitable. So the margins have been impacted by the fact that they're now selling more or less profitable cars. So we saw a drop in margin to 8.8%, which is a 3% dip. And certainly the numbers are maybe highlighting that they've got problems in terms of profitability going forward. And certainly I think we've also seen a lot of competition coming in from certainly the Chinese car makers into Europe. And they also cited a slowdown in China too. So I think certainly EVs sales have been good, but has been a less profitable part of the business. Then certainly it's hit numbers. And again, as you say, the share price had a bit of negative news on the back of it.
Now, Boohoo, the British fashion retailer, had pretty dire results out today. Pre-tax losses of around £160 million for the year. Online fashion retailers did well during the pandemic. Is this just a case of the demand for online fashion is now sort of diminishing, or is it more about the big players coming back into the market there?
I think there's a wee bit of both in that. I think certainly, as you say, earnings were down 7%, certainly revenue was down 17%, and it was pretty much across the board. We've started to see more players coming into the market within online, the likes of Shein. And interestingly, Zalando and ASOS had slightly better numbers and had a return to growth. So it seems to be a bit of the fact that, during the pandemic, online was very popular. However, we have seen that I think other players coming into the market has impacted it, but certainly it was a poor set of numbers. And as you say, the loss has increased significantly. So some more trouble ahead for Boohoo. Share price was off over 5% this morning, and it further compounds losses so far this year.
Now, I can't let you go without asking you about the Bank of England decision tomorrow. We're not expecting very much from them, are we, Zoe?
No, I don't think so. I think we're probably going to just see the rate steady, I think, from now. And I think we're still seeing inflation above 2% target. And I think certainly any cuts will probably be into the later months of this year, if any. So I think we're expecting them just to remain a hold. But it'll be interesting to see the narrative and if there's any hint that when the first cut's going to come.
Zoe Gillespie from RBC Brewin Dolphin, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.